Let us bring in Mohamed El-Erian right now. He is one of the most widely followed economists on Wall Street. He is with, he formerly of PIMCO and now with Allianz. Right now, give me your thought about all of these headlines, including the ones just breaking about Kevin Warsh.
So let me just say, Kevin Warsh would be a great Fed chair. He came very close back in 2017. He knows the markets well. He knows economics well. He was a Fed governor. And he communicates, something that Chair Powell has had trouble with. So,
which is what?
If you look at President Trump's statement this morning, it hardly moved the market. Why? Because the market acknowledges that Chair Powell has been late. The market acknowledges that Chair Powell has been wrong, and the market knows that President Trump doesn't particularly like him. The one thing the market had questions about was the word termination. That's a strong word.
That's what he posted on Truth Social.
Correct,
termination
this morning.
Can't come soon enough.
And it's been clarified now that he didn't mean he would fire him immediately. But the market has been incredibly calm. The bond market hardly moved on the statement. And I think the bond market is understanding that there is a transition coming at the Fed. And I think Kevin Warsh would be a very good replacement.
Why? Aside from the communication issue, and it's interesting that he apparently, according to the Journal, said, don't fire Powell, because perhaps, Mohamed, would that not be incredibly disruptive to the markets?
So there is the issue of Fed independence. And there is the question of would firing Powell be a problem? I mean, the easiest thing for Powell to resign. It happened on the supervision side. The vice chair for supervision, Michael Barr, resigned, and a President Trump appointee became the vice chair. So if you really want to protect the integrity of the Fed and its independence, Chair Powell would resign. That's what he would do.
Let's talk about the bond market, because over the past, let's call it 7-8 days, there appeared to be a bond rout. Now, let's put it into perspective. The bond yields on the 10-year and the 30-year started rising, which meant that somebody was selling a lot of U.S. government debt. And when interest rate goes up, that only means that it costs more for the government to service the debt. I mean, just pay the interest on the debt. It's already at $1 trillion, and it would be going up pretty exponentially. Tell me exactly how close you think we were to an accident in the bond market.
We came very close. Tuesday morning and again at the end of the week, we came very close. Liz, you know, there's a very thin line that divides unusual volatility, where you and I can trade. We may not like the price, we may not like the fact that Wall Street has a very wide bid offer, but we can get done. To market malfunction, where we cannot get done, and then we'll go do something else and spread the dislocation. We got very close. On Tuesday, we stepped away from that when President Trump announced a 90-day pause. And on Friday, we stepped away from that when one of the Fed officials said, of course we'll intervene. If there's market malfunction, we will intervene.
But yesterday, Powell said, when asked about whether he would intervene, he said no with an explanation, and his explanation was that we're still getting conflicting headlines from a lot of members of the administration about where these trade deals stand. President did just, of course, say that we are very close with a bunch of them. But this morning, Fox Business landed an interview with John Williams, who is vice chair of the Federal Reserve and head of the New York Fed Bank. Here's what he said, basically underscoring what Powell has said. Listen.
The economy is in a very good place. There's a lot of uncertainty out there about trade policy and other things. From my point of view, I think monetary policy is well positioned. I don't see any need to change the setting of the Fed funds rate anytime soon. And it's really about collecting.
Okay.
So the Fed leadership is ruling out 2 out of 3 possible cuts. You have what's called the good news cut. You cut because inflation has come down. They've ruled that out. Then you have the bad news cut. You cut because the country risks going into recession. They've ruled that out. So they've ruled out the good news cut and the bad news cut. There's a third cut, which they didn't rule out, which is the awful news cut, that the market's about to malfunction. So they are saying we don't need to cut because we don't believe inflation is coming down. We don't need to cut because we don't believe we're going into recession. But they've left the door open to cutting if there's market malfunction.
Right now, if Powell called you and said, what do you think? Would you say cut at the next meeting, June?
I would say be less decisive, less deterministic, acknowledge that we are in a bumpy journey to another destination, And monetary policy has to react not just to the short term, but to the longer term.
We don't want our viewers to look back on this very turbulent time where the markets have taken a pretty significant dip and say, man, in the rearview mirror, I should have been buying at that moment. What do you think about this as a buying opportunity?
So I think that this could be a buying opportunity, but you have to have two qualifications. One, you've got to have an appetite for volatility.
A stomach.
A stomach. So don't put your grocery money in here. This is not. If you have long-term savings, this could be an entry point. Second, do it over time. No one will be able to guess the bottom of this market. So this dollar average in. Put a bit every month. Don't put everything in there, and don't put your grocery money in the market right now.
So ladder in. Don't put it all in at once, because we may see lower lows.
Correct. And we certainly are going to see volatility. We are going through major transitions. There's an attempt to rewire the domestic economy, what you're seeing happening on DOGE, deregulation, on the tax system, and there's an attempt to rewire the global economy, what you're seeing on tariffs and non-tariffs. So this is a major change, a major transition, and it's going to be bumpy.
It's a pleasure to have you, Mohamed, especially in studio. Thank you so much.